Investment fund company O'Leary Funds, the O'Leary Financial Group, O'Leary Fine Wines, and a best-selling book series on financial literacy. He's diversified across multiple asset classes, but now has 20% of his portfolio in cryptos, including DeFi platforms like OneDeFi and Immutable Holdings, a blockchain holding company. Both listed on the Canadian exchange NEO in 2021. And he has certainly come a long way from initially dismissing Bitcoin as a nothing burger, and is now one of the boldest Bitcoin advocates, and says DeFi will become the 12th sector of the S&P 500. Kevin, great to have you with us.
Thank you. Great to be here.
All right, Kevin, as wonderful as it is to have Mr. Wonderful, we also have Quant Maestro and Bitcoin OG, Roy Niederhoffer. Roy has been a Bitcoin bull since 2011. He's the president and founder of RG Niederhoffer Capital Management, a diversified hedge fund with nearly $1 billion of assets under management. He wasn't only ahead of the crypto curve, but has thrived in volatile markets like these for decades. His Quant Futures flagship fund beat the last two major stock market crashes, growing more than 100% during the tech bubble crash of 2001 and gaining 51% after the financial crisis in 2008. The firm's Smart Alpha Fund has seen consistent double-digit annual returns since 2000, and his funds are crushing it again this year. He also manages a 9-digit internal DeFi portfolio, and Roy's investment accolades include being ranked number 9 in Barron's top 100 hedge funds. Roy, good to have you with us.
Thanks, Michelle. Great to see you again.
All right, so we have this amazing power panel. I'll be asking questions for the first part of our session, and then we're going to open it up to our viewers. Sound good? All right, Kevin, let's start with you, and let's start with a macro picture, because it's now exactly 1 month since Putin invaded Ukraine, and the conflict is not going as he expected. We've got these rising geopolitical tensions, sanctions on Russia seeing a surge in commodity prices. The IMF is now projecting global growth to slow down by at least 1.5% in 2022. We have inflation at 40-year highs here in the US, the Fed hiking rates for the first time since 2018. Powell says he still thinks he's going to be able to hike rates at least 6 times this year. And we've got recession projections increasing. Goldman saying there's a 35% chance of recession over the next year. So let's start with your big macroeconomic read on the environment, Kevin.
Yeah, for as tragic as the Russia-Ukraine situation is, as far as markets and investing go, I don't put much weight on it. I'll explain why. That represents less than 1% of the S&P earnings, no matter how you triangulate it. Obviously, these sanctions are unprecedented in economic pressure. And the fact that the Swiss actually shut down Russian accounts is also unprecedented. So there's going to be a lot of economic pain and misery inflicted in Russia. And my assumption, and I think the market, although many people won't say this, I'll go ahead and say it, Putin will probably end up in a hunting accident pretty soon. And that's because he's inflicting so much economic damage. And in addition to the misery he's, putting onto these Ukrainians. I mean, this is a Mussolini situation. I've seen this movie before. And it's okay if that happens to him. I think most people think that he's probably got long COVID or suffering from syphilis. Nobody really knows. But at the end of the day, it'll resolve itself probably sooner than later. And so that's one way the market looks at it. Now, as far as crypto goes, and Roy and I are obviously focused on that, I don't think that matters as much as this, what I call 4 vectors of policy coming at crypto right now. Let me walk just through the shopping list. This is also unprecedented. Number 1, you got the Loomis bill. And it's mostly positive. I've read it. A lot of positive policy in that. Number 2, you've got the executive order from Biden that says we must embrace this and regulate it. Also good news. It could have gone the other way. He could have said we want to make this illegal. Number 3, you've got the SEC talking about carbon audits, and I'll get to that in a moment. That just happened last week. And number 4, you've got this remarkable situation coming out of BlackRock, the world's largest money manager, decrying and talking about Bitcoin mining and carbon credits not aligning. And I think there's a lot of policy in all of that. But the fact that that's all happening shows you that crypto is never going away. And I think the more it gets regulated, the more institutional assets flow into this asset class.
All right, we're going to break down some of those four vectors that you mentioned in greater detail. It's interesting, Kevin, you and I share the same hypothesis of how this ends up for Putin. I grew up in South Africa, and let's just say that coups have been a way of solving a lot of political problems across the African continent. And I was actually projecting that I anticipate that this is how this scenario ends for Russia as well. We know Lindsey Graham is advocating for that approach. We'll see what that would mean for the markets. But Roy, let's bring you in. And I want to initially separate the concept of Bitcoin and cryptos for this question, because I'd like for you to make your case for Bitcoin in this current environment.
My view right now is that the Russian conflict has made the case for one of the best features of Bitcoin, which is, of course, that it's always there wherever you are. So the initial attraction I had for the asset back in 2011 was it seemed to solve a historical problem, which is how to take your things from place to place if they're too big to carry. And of course, Bitcoin is always there on the blockchain wherever you are. So in terms of asset transport, it's pretty clear that there's a great use case for it. But we have a much bigger situation happening, and it has really very little to do with Russia and Ukraine. For me, the big reason to be interested in Bitcoin and the space in general, but in particular, the largest assets in the space, Bitcoin and Ether, is that the balance sheet expansion of the Federal Reserve has gotten so far out of control that there is no heading off inflation caused by the printing of dollars. Now, a lot of people blame things like gas prices at $4.30 a gallon, which is where they are right now, on the Russia conflict. But that's not what caused it, in my view. Maybe the last few tens of cents. But in reality, we already had gas at $3.40 a gallon, up almost 50% in the last 12 months before the Ukraine conflict even began. And that's caused by too many dollars chasing too few goods. So what I'm going to do right now is make a case that I think is going to make a very reasonable, sensible prediction that we get Bitcoin prices 10, 100, 1,000, and even 10,000 times what the price is right now. Now that sounds probably a little crazy, but let me take you through it. Right now, the inflation rate is about 10%. I think most people would say it's fairly reasonable to think that we could have 10% inflation for another 20 or 30 years. That doesn't sound so out of control. It's also reasonable to think that Bitcoin itself grows from where it is right now. It's about the size of the Thai baht. And if Bitcoin happens to get a little more acceptance and grows to the market cap of the British pound, that's about 5 times what it is right now. You put those together, in 20 years, you have a Bitcoin price 30 times what it is now. In 30, 85 times what it is right now. So we're talking about a Bitcoin price of 3.8 million, even if a very reasonable current assumption holds true. And we can go beyond that. Let's say there's 15% inflation for 30 years. And the Bitcoin market cap rivals that of the euro. We're talking about a Bitcoin price of 56 million. And if Bitcoin becomes the world reserve currency, and we have 20% inflation, the Bitcoin price is going to be almost 500 million. And remember, it's trading at 45,000 approximately right now. So these are edge cases, I admit. You'll probably look at this in 20 years and say, wow, what a silly idea that was to predict that. But I think they are non-zero cases. They are reasonable assumptions to make. And for many other reasons, I think it's a very interesting investment right now.
All right, Roy, so you're saying that there is an edge case of Bitcoin at 500 million in the next 30 years.
Yes, and that is not even a hyperinflationary case. Hyperinflation, we'd be talking about billions or trillions. Of course, the dollar would be essentially worthless at that point.
Kevin, what are your thoughts? Do you think that Roy could be onto something here with this hypothesis?
I think it's impossible to predict price or volatility. And obviously, the trend is your friend as far as Bitcoin's concerned. We have I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stablecoins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stablecoins. And so that's interesting, because the fact is, today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want, obviously, to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. They were awarded coins, they kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be HUD 8, Marathon, Riot, and Hive, which were very popular to be indexed. They really traded in tandem with Bitcoin. So it worked for a while. But that's why I talk about the four vectors. That correlation is going to fall off pretty quickly now that we have, for the first time, calls for carbon audits, because most of the public companies in the US that have been used for proxies have been saying, okay, we'll just buy some carbon offsets. And that worked fine. But now that the SEC wants to audit this, you can't find an auditor that's willing to sign off on that ledger, because you can't say I'm using, dirty energy to mine coin, and I bought, an acre of the Amazon forest and try and pass them off. It doesn't work. There's no way to audit carbon credits. So we are in a bit of let's call it a bit of a pickle right now. And I'll be frank and transparent on this. I have dumped all those stocks as soon as I read the executive order out of Biden. I sold.
Wait, which stocks are those? The mining
specifically,
stocks?
Yeah, specifically we owned HUD 8. We were indexing some of our my mandate. I can't own Bitcoin. I mean, I can own it personally, but if it's in an operating company, I can't do it because we don't have a regulation, a rule on that yet. And that's why most of it is actually held by high net worth and hedge funds like Roy's, where they don't have that compliance issue. I do have a compliance issue. So we indexed, and it was working just great. Marathon, fantastic trading vehicle against the price of Bitcoin. Riot, HUD 8, and Hive. And so they're good liquid stocks. They're easy to get in and out of, but I don't own a single share. Dump them all. I mean, they're going to be forced. They're going to run into carbon audits, and their expenses are going to go up. And we can talk about where capital is flowing, but it certainly isn't that model anymore.
Okay, but before we get into that and touch on the ESG topic, which you were well ahead of the curve on, Kevin, I just want you to go back to Roy's macro hypothesis here and all the elements that he's brought into it, including this hyperinflation. Does it fit within your realms of possibility that we do hit that kind of high for Bitcoin in 30 years, or is that not even something that you think is feasible?
You can't say that it's a zero, as Roy pointed out. His scenario, when he talks about these extreme prices, is hyperinflation, 15, 20, 25%. I don't know if that's going to happen, but I am on board with him on the trend as your friend on pricing. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it.
All right. Roy, how are you allocating your crypto portfolio at the moment? And I'd like to point out that you bought Bitcoin in 2011. I believe it was $10 at the time. And you also bought Ethereum in the double digits. So when we know Ethereum's at 3,100. So you've obviously called these protocols, coins correctly. Give us your portfolio breakdown right now.
Well, I'm a big believer in having the blue chip names in any index and concentrating on those. So I think right now it's a very tough call to pick a altcoin, let's call them the number 6 to 20 coins, things like Terra, Solana, Polkadot, Avalanche. These are coins that have about 20 to $30 billion in market cap. When we talk about Bitcoin, we're at 841, ETH is at 375. So what that means is you're looking at, for an institutional investor, something that has 20, 30, 40 times the liquidity. And what this means is that if my scenario becomes a possibility, let's say, and institutions go into the space, they're going to go for the largest coins because that's where the liquidity is. No one ever got fired for investing in cryptocurrency in Bitcoin. Well, maybe they did. But if you have to explain why you picked Polkadot and not Avalanche, when Avalanche was the one that went up and Polkadot went down, that's a much tougher call. But buying the big market cap one, I think, is the first step for most people. It's the entry level trade. But I think also because of the liquidity in this trade, that's where the money is going to go. And to me, the largest prize here and the offset idea, the moral good compared to the carbon emissions and all the other things that might be bad about Bitcoin, the holy grail of this space is to give billions of people the access to lending, to investments, to savings, and to money transfer in a form that is supply constrained and ubiquitous all over the world. That's never happened before. All of those things either were impossible for a good chunk of the world's population to access, or they had to access it in the form of their local currency, which has enormous risk and can be devalued. And in fact, if you look historically, almost or near or even exactly 100% of all fiat currencies have been devalued by 99+% over, say, a 200-year period. There are maybe only a couple of exceptions for that. And I think that's where we're headed in the United States. The value of the US dollar is down about 99% over the last 120 years in real terms. And I think that's a risk that everyone faces. To offer the world, billions of people, decentralized finance in a stable currency, AKA Bitcoin, is the big prize. And I think it's going to be Bitcoin that does it. And it's been demonstrated already technologically. I think that's what El Salvador is seeing already.
Kevin, do you agree? Do you see Bitcoin as the ultimate prize, the ultimate savior in this economy and in this environment?
I see it as the number one destination for institutions that are allowed to index it when they can index it. They would be picking up 1 to 3% weighting if they could. They tried to do it, as I mentioned earlier, using equities that mine Bitcoin. And that's in a bit of turmoil because of ESG mandates. But Bitcoin itself will provide enough liquidity for an institution. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. Now, I'll add that the Canadian regulator, specifically the OSC, in the last 2 years has been extremely enlightened. And what I believe, and this is a personal opinion, and I've said this before, but I believe that all the regulators talk to each other practically every day. But there's a special relationship between the OSC and the SEC, because they regulate markets that are so similar in nature. And so I believe that whatever is going on in Ontario has already been quasi-approved by the brethren at the SEC, and they're using Ontario and the Canadian provinces as guinea pig states to try these ideas out. And what ideas are those? The first ETF with the underlying asset, real Bitcoin. The first ETF with the underlying asset, Ethereum. The very first global crypto exchange attached to a dealer broker license, both sides regulated. That was extraordinary. That was called BitBuy. I know that one because just a few hours ago, WonderFi acquired 100% of it. So now WonderFi, which has decentralized finance, has combined with centralized wallets. That's never been done before. In addition to that, the OSC has made the order by which that was licensed public. Many other jurisdictions are reading the 300+ page document and using it as a blueprint for other jurisdictions like the United Arab Emirates and Brazil and Switzerland and England. So those regulators are marching ahead, making the assumption that there will be SEC policy. So if you're an investor now, like I am, and clearly Roy is, we take our positions pre the stabilization of indexing by institutions. Why? We'll be rewarded for taking that position now. And when it happens, I don't know. Could be 6 months, 12 months, 18 months, 24 months, who knows? But when it happens, prices are going nowhere but up.
Kevin, I completely agree with you. I think you're making a really important point about what speculators do. We recognize right now that the reason that prices for these cryptocurrencies are as low as they are all the fear, uncertainty, and doubt that there is around them. And were those not to be the case, you suddenly have an asset that's worth 10 and 50x what it is right now. So I think that's really a good demonstration of the role of what people who invest the way we do are for. I think you make another really good point about the Canadian regulators making the case for cryptocurrencies. They also did something that I think we have to mention, which was they took the bank accounts of people whose behavior they didn't like. And that, if there were ever a use case for cryptocurrencies, that is a very, very dangerous place for anyone with assets to think that your behavior on the ground could cause you to lose all of your assets. Obviously, Russian oligarchs are feeling the same way. And so I think when a government can come and take your money, be it reserve assets or your bank account as a trucker, that's a time when you want to have your assets everywhere in a highly protected place. Another reason I want to augment your point about reducing volatility, why these things will be less crazy to own. They're not going to go up 5 and 10% and down 5 or 10% in a day anymore when things stabilize. The reason for that will also be the development of a robust derivatives market. We saw this happen with the S&P as the options market developed. Any market that has a robust derivatives market will decline in volatility. And if anyone talked to me 3 years ago, you know how much I was complaining about no volatility in the stock market. There will be a time when people complain about the lack of volatility in Bitcoin.
Roy and Kevin,
the price will be a lot higher.
Does this lack, and we'll throw it to you first, Roy, does this lack of volatility mean that you both are anticipating, mean that the potential for dramatic price appreciations are also going to be gone?
Absolutely. One of the risks right now when you buy Bitcoin is it's going to go down 50, 90%. We just had a 70 or 80% decline through 2 years ago. Right around this time 2 years ago, Bitcoin was trading in the 3,000s, even slightly below. So one interesting piece of it is that 90% of the wealth in cryptocurrencies has been created in the last 24 months. It's that new. And a reason why we're also today going to be talking about decentralized finance and all the opportunities is the approximately 2 trillion in wealth that's been created mostly over the last 2 years.
Okay. Roy, you've touched on two big themes here, regulation. Kevin, you've touched on two big themes, regulation and ESG. And we know Ethereum, the second biggest crypto by market cap, very significant development expected in June for Ethereum, ETH 2.0. That's expected to launch, and that's expected to be the merge of the blockchain's proof of work and proof of stake chains, which reduces its energy consumption dramatically. Now, Kevin, you, again, have long stated that institutions focused on ESG, compliance and regulation have been holding back because of this ESG concern. And the rise of ESG has put the inefficiency of Bitcoin's proof of work model on investors' radars Just recently, the European Union considered banning Bitcoin because of its environmental impact. So now we have ETH 2.0, merging proof of work and proof of stake, and that is expected to reduce energy consumption by about 99%. So, Kevin, do you think that ESG concerns will then take institutional money out of Bitcoin and into Ethereum?
So let's just dissect that, and because you've made a few statements there that are very important. Let's just talk about Ethereum 2.0. That has been on the calendar for over 2 years. And it's always just coming to a theater near you. And the reason it doesn't happen that quickly, and probably won't happen on schedule here, is not everybody within the ETH community agrees with this move. And there's a bunch of stakeholders that don't benefit from a move like this. Removing proof of work to proof of stake is not going to be to everybody's benefit. And so that fork in the road could be a bump, not just an upside. And so I don't know the answer to that. ETH remains the platform of the standard, if you wish, but at the end of the day, it doesn't mean it'll be successful. Let's go back to the comment regarding all of this policy around ESG. It is remarkable that you have both government policy and private policy dictated by the BlackRocks of the world and corporations making claims of carbon neutrality, that all of this would be happening at the same time, that it takes a lot of energy to actually be awarded a coin. And here's why I argue to investors and institutional investors why it's a good thing that there is proof of work. I'll walk you through it, all right? In America, 85% of the dams that were created in the last 150 years contemplated turbine power. However, 85% of them, the turbines were never installed. Now, whose economic interest would it be to go back and install those turbines to get access to 100% carbon neutral power? I'd argue that is going to be capital that would set up data centers and mine Bitcoin with 100% hydroelectricity. In fact, that has actually happened already. The capital that actually did that was sovereign wealth out of the Middle East in Norway. They've built out a facility on its way to 300 megawatts, and we'll see that. I think they're up at 40 already. They have been hashing coins since December. It's the new model. They call it the Norway model, 100% compliant. And the actual institutions are not allowed to own Bitcoin that actually funded that thing. But they're keeping every coin they're awarded on the balance sheet. And they've done one thing else, which I think will become part of the new model. And I'm arguing now for why capital will pursue this. They've been able to figure out a way to take the network awards that you can never allocate to where they came from. They could come from China, wherever, and actually remove them as what they call slag from the coin that was awarded. So what is sitting on the balance sheet of that company called BitZero, it's their first facility, but they're contemplating ones in upstate New York, Tennessee, Montana, and the amount of capital they're going to burn up doing this is hundreds of millions of dollars. But it's there from institutions that are taking their money out of the public stocks that are going to get audited. So I'm arguing that Bitcoin mining is good for sustainability. It's good for longevity. It's good for productivity. And it's going to do something that's really important for America. It's going to put those turbines back in those dams because that's the number one use. And then they'll let the communities use excess power when it's needed. I think this is a good thing. And this is going to be one of the big topics that you're going to hear about at Bitcoin 2022. In fact, there's multiple keynotes around this whole issue because of the squeeze happening right now on this ESG thing. And ESG has to be dealt with. The private sector, the public sector, the president, the Loomis, all of these bills, the SEC, they're coming down hard on carbon and carbon audits. And it's going to affect this industry in a really, I argue, positive way. Except if you're an existing Bitcoin miner that is using carbon credits, then you're screwed.
All right. So Kevin, let me understand this because we know that Elon Musk, Michael Saylor, they launched the Bitcoin Mining Council. last year in response to these ESG concerns. We've had several guests on Kitco saying what you're saying, that Bitcoin mining is actually facilitating the development of green energy resources because it's funding these projects. So it's good for decarbonization in the sense that, as you're saying, that it's funding alternative sources of energy. Does it come a point, though, that boards looking at ESG then view that as a positive and saying we'll invest in Bitcoin because it serves to promote development and funding of clean energy sources? Do you see that flip happening?
Not yet. The only funds that have done this have been sovereign so far. I think it will happen. I think after the Norway project's proven, which would be in about 12 to 14 months, that will become the model. That same model will show up in Montana. It'll show up in upstate New York, in Tennessee, everywhere where there's excess power available. That's the model that they're going to use. Now, the fact that you've got institutions funding it, and the reason I know this is I actually became an Emirati citizen 6 months ago, just so I could vest alongside them. And I'm very proud of that, but I own a piece of that Norway facility. And that is, for me, solves my problem. Nobody can give me an ESG audit. There's nothing to audit. I have no carbon. There's zero carbon there. So all of this noise that's coming at everybody about this is, I'm saying, what carbon? We're just using hydroelectricity and we're doing it on a sustainable model. And we're providing for the university in Norway access to high-speed computers. And on top of this, I mean, this you couldn't even dream of. When they built it, they put beside it a hydroponic stack for tomatoes and a canning plant, and they take the heat off the stacks and grow tomatoes. Talk about community. I mean, they don't want to lose that Bitcoin mine now. It's not one of these miners that rips into town, mines some coin, gets awards, and blows out. These guys have long-term power at under 4 cents a kilowatt hour. So the whole point is that is the model. And I think that's what's going to solve this problem for POTUS's executive order, what Larry Fink wants to do, what the SEC is doing. But right now, as you pointed out, very few institutions are taking that. They're just staying away from it completely because they're saying ESG mandates too scary, carbon audits too scary, SEC too scary. You know, we don't want to lose BlackRock in terms of managing our funds, all of this stuff. And we're going to wait for the Loomis bill to come out. So, we're in the transition period. Roy pointed that out. But I bet you when we have this conversation, the two of us again in a year, it's going to be remarkably different.
All right.
I completely agree with you, Kevin. I actually think that there's even more optimism here because I actually run an Ethereum mine in upstate New York. And it's getting so expensive right now that you basically can't do it using hydrocarbons. And that's what's happening all around the world. The increase in the oil price and the resulting increase in energy costs has meant that unless your power is essentially free, you can't do it. And hydrocarbons will never be free because there'll always be a demand for hydrocarbons.
Right. All right,
so
Roy.
What does this mean? It means hydro, and it means potentially even Gen 4 nuclear is going to be the source. But I also want to put this in perspective here. I think most people have heard a lot about Bitcoin and all the terrible energy use of Bitcoin. The total energy use of Bitcoin, just think for a moment, what percentage of global carbon emissions come from Bitcoin? But what would you say that number is? The answer is 1/500th. The gold mining industry is 3 times the carbon emission of Bitcoin. Airplanes use 50 times the carbon emission of Bitcoin, and so on. You can, right. I mean, so my point here is that there's a flip side of this. There's a social good. Billions of people having access to stable investments, et cetera.
Roy,
and that offsets it.
Okay, so, but Roy, we want to get off the ESG topic and we want to talk about how our viewers can make money for those of them that do not have an Ethereum mine like you do. So in this environment, Roy, give me your top DeFi or crypto investment. Is there an altcoin that you think has room to rally? Give me in 2 sentences your top investment in the space right now.
I'm going to disappoint you right now because I don't have a pick past the upper tier, which of course is Bitcoin and Ether. And the reason I don't have a pick there is that when these coins become accessible, let's call them the DeFi top 10, which is, the 10 to $30 billion side chains, et cetera. these coins are available to the public, and you're going to hear about them long after the venture capital firms that funded these have bought and pre-mined everything at 1/100th the cost you're going to pay. If you're buying Solana right now, you're going to pay 100 or so.
Right.
It originally was 15 cents. So we've had massive price appreciation already, and I don't see these as unique and different enough from each other that it's easy to pick a winner. It becomes like picking stocks. It's
so
a
then
very,
let's
very
go to
difficult problem.
All right, so then let's go to the Ethereum 2.0 point that I touched on with Kevin, and he makes a valid point that this has been anticipated for a very long time, and yeah, it could also go very wrong. What is your view on how this Ethereum 2.0 merger works out?
So I think it's going to happen, and I think it's going to happen because Ethereum, despite being supposedly decentralized, is actually a lot more centralized than it seems. And I think the people at its core want this to happen. And this, by the way, is a reason why proof of work is very valuable compared to proof of stake. So remember, proof of work is what Bitcoin has. That's all the energy utilization. Anyone can go out there and buy miners and buy energy and mine Bitcoin and participate in the governance of Bitcoin. However, that's not true if in Ether. Ethereum blockchain favors the largest holders. And so it's not as decentralized. So I am not as bullish on the idea of proof of stake as a replacement for proof of work. It's an alternative. It has some advantages and has some disadvantages. And to me, I think it's a good thing that we're using 1/500th of all human carbon emissions with the potential to give billions of people decentralized finance.
Okay, but you have also invested quite significantly in other protocols and projects. I hear that you're saying that neither are going to trump Bitcoin or Ethereum, but which of these projects do you think will gain the most adoption this year? I think a proper portfolio, just like in stocks, a proper portfolio should use the wisdom of the market. I always tell people, if you want to invest in the stock market, buy the S&P 500. And yeah, you get a lot of Apple and you get a lot of Tesla in there, but those are really, really good companies. Amazon is in there and huge in the index for a reason. And the same thing, if you're going to buy cryptocurrencies for a long-term hold, then you want a lot of Bitcoin and a lot of Ethereum and much smaller amounts of everything else. So I think the number is about 60%. So you don't have a third pick for
I do not have a third pick. I think it's fine to trade these things and have fun with them, but I don't see the potential in the others in any one particular coin.
All right, Kevin, what are you identifying as the biggest opportunity in crypto and DeFi at the moment then?
Well, I own all of the positions that Roy's talking about on an index basis. And I index up to 5% weighting maximum across 20% hold, which is a standard indexing practice for sovereign wealth funds. That's just milk bone strategy. But I've gone a little farther. I've decided that I'd like to own some of the infrastructure of Web 2.0, Web 3.0. And so I've taken equity positions where regulators allow it, and that's primarily Canada. The NEO exchange is the preferred exchange now. It's been announced the CBOE is buying it. So it's going to be basically an American exchange, but housed in Canada. But it has companies like WonderFi on it. And now that means BitBuy's on it too. That was the first license granted by the regulator there. It trades as an equity, WNDR, and also Immutable Holdings, a company that's headquartered basically in Puerto Rico, where they are building out this huge platform for NFTs. They own NFT.com. They're a blockchain company. You can buy those equities on the NEO exchange in Canada, but where the regulator allows it. And so some of these companies get listed in Norway and Germany where regulators allow it. But for me, those are also full weightings. I've got 5% weightings in those names because I want to own the picks and shovels. It's not just the gold that people made money on the gold rush. It was the picks and shovels. So in my portfolio, I've got a lot of picks and shovels. And again, it's all software. You meet these executives in these companies, they're young, really strong engineers in there. And they don't want to work for industrial companies anymore. They want to be on the chain. That's where the future is. And they're the smartest hands. And that's where they make the most money because they're cutting edge advances in financial services. So that's the investment thesis. It's not just Bitcoin. Some of these equities have actually outperformed Bitcoin for me because they've had dramatic moves as markets start to recognize the merits of owning these companies.
Yeah.
But again, it's like Roy said, I bought these at fractional prices on their first and second rounds, and now they're trading and they've moved materially. So I'm going to keep doing the same thing. That same thing with the Norway project. That's private.
But what about investors that do not have the opportunity like you did to invest in one DeFi and Immutable Holdings, which, as you said, have now listed?
That's the point. They can now if they wish.
They're can public now. But are there other picks that you are viewing as having tremendous growth potential as well in the, as you so call it, infrastructure side of things?
Yeah. I would say the other opportunities is short Marathon, short Hive, short Hut 8, and short Riot. Those stocks are going to get killed when they get their carbon audits started on them, because there's nowhere to go. There's just no way to audit it. And they're not going to get an auditor to sign those statements. It's unfair in some ways. I mean, basically, this is a classic case where the nascent industry started just a few years ago by these great pioneer entrepreneurs. Right. They get shot with all the arrows because the president loves climate change mandates. And so does BlackRock, and so does the SEC now, and so does the Loomis bill. So, I mean, that's unfortunate. But sometimes, the pioneers have to get the arrows so that the ones that come behind them can set up shop.
All right. Kevin, I know you're big into NFTs as well. You've said that in 5 years' time, the market cap of all NFTs will exceed Bitcoin. I'd like for you to explain how you see that happening. And more importantly, if an investor wants to capitalize on this NFT craze, what's the best way to do it?
I don't buy JPEG NFTs. I'm not in the lazy ape thing or any of that. What I do is I look for use cases that create economic value. And the one I've been talking about a lot lately, there's lots of other ones, but the one that's so obvious and easy to understand because people like watches is the watch industry. So the watch industry, about 12x. So there's billions of dollars a quarter trading in secondary markets for watches, the Rolexes, the Patek Philippe's, Audemars Piguet, FP Journe, all these watches. The majority of them are fake. That's what's happened. You see a Daytona like this go from $13,000 to $60,000. There's a lot of motivation for people to rip them off. That wouldn't happen if there had been an NFT minted at the actual factory that micro scanned the dial at a high resolution, because every dial has micro imperfections in it, and then created an NFT that traveled with the ownership. In other words, give me the ownership papers digitally. There's tremendous economic value in that. And that's an NFT market that's going to explode to the upside as once the white paper is released from the Horological Society. That's where we're going. Same with real estate, same with antique cars, same with pens, same with jewelry, same with all the collectibles that have physical value and asset that'll be turned into digital ownership and then can be moved from wallet to wallet as the watch gets traded. And the royalties can go back in the smart contract to the Rolexes and the Pateks and the FP Journes because they provided and minted the NFT in the first place. Right. That makes sense to me. The rest of the stuff, very speculative. Do I want to pay $360,000 for a lazy ape? No.
I believe it's Crazy Ape, but I'm not entirely sure about that one.
Bored
ape. Bored ape. He's bored, he's crazy, and he's lazy.
That's what I mean.
Okay. Bored, crazy, and lazy. That's a good combination. Not really. Roy, very quickly from an institutional side, and very quickly, because I do want to bring in our audience questions now. What's your view on funds being exposed to the NFT sector? What way would they go about doing that? Is that something you're looking at?
I'm not at all interested in, well, for me, any piece of art has to have craft, beauty, and some sort of transporting quality that enhances your experience. Nothing I've seen in the digital space does that. Essentially, there's an unlimited supply of every adjective followed by ape, followed by or any other animal type. And that's so I have no interest whatsoever. Maybe you can make a case for the first set of popular NFTs, and crypto kitties maybe it's like cave paintings in a sense. You might make a case for that as the first NFTs. But
Roy, where do you think the regulator's going to come down on this stuff? What are they going to call?
Yeah, these are securities. There's no question. So anyway, my view is exactly the same as Kevin's, that there are real use cases for these real estate. Any hard asset can be put on a blockchain, and you can do provenance, you can do fractional ownership. The SEC eventually is going to have to give us the regulatory framework, and plenty of money will be made. However, I don't necessarily think that people are going to pay a lot of money for this process to happen. If you think about it, putting some things on the blockchain is not that difficult. So I'm not sure that there's $100 billion NFT company, but there's certainly $100 trillion of potential NFT value that will exist on a blockchain.
Okay, you both mentioned regulation. I just want to wrap up this portion before we bring in our audience questions. Kevin, with regulation, and you touched on the executive order from the Biden administration that was released on digital assets, and it stated that around 16% of adult Americans, approximately 40 million people, have invested in, traded, or used cryptocurrencies. Now, Kevin, we've had guests on the show saying that because of that, a Bitcoin ban is now impossible, that it is political suicide to alienate that proportion of voters. Can we lay the Bitcoin ban concept to rest? Can we safely say that the US outright banning Bitcoin and other cryptos is no longer an existential threat?
Yes, we can. There's no chance that we're going to be banning Bitcoin or anything else that holds economic promise in terms of developing new technologies for financial services and payment systems. That's always been the hallmark of American entrepreneurship. We're not going to ban that. Most of the engineers today that are working on these projects see tremendous potential, transparency, audit, everything. They provide so much upside that they'll remain going. But the one thing that's 100% sure is they're going to be regulated, 100%. But I'd argue that's good news. We get this regulation in place, the institutions will pour in trillions of dollars. Those that have been speculators like Roy and I will benefit from the fact that these will get indexed, and that will be a great upside. And then what happens after that is based on market demand, based on indexing. The majority of the ownership will shift to the institution. The majority of the S&P is owned by institutions. People think retail owns stocks. No, they don't. It's like Facebook. The reason it got crushed was that it got re-indexed from 5% down to 2.5%. And it took 4 weeks to flush all that out because of the new perceived risk on the metaverse and everything else. That is not a retail stock. That is an institutional stock. It was one of the FANGs, still is, but it's all institution. And that's the upside and the potential of Bitcoin.
So, Roy, do you think there's going to be like a moment of definitive clarity where it's made official that some ban is not going to happen? And if so, what do you think that does to the price?
No, I think there's always a chance for a ban. I absolutely think there's a chance that Bitcoin could be banned. Look, private ownership of gold was banned in many, many countries, including the United States. So could it happen? Absolutely. However, were that to happen, it would be such an environment of chaos and hyperinflation that Bitcoin would be worth even more money at that point. If they're going to ban it, it's going to be the time when you absolutely want to load up on Bitcoin, because it will only be in such a chaotic situation that the only thing you can transact it is Bitcoin.
All right. Kevin, we have a question from someone in our audience for you. Riley Bayton, I believe, is asking, when do you think a US Bitcoin spot ETF is going to be approved? Do you think we'll see that by 2022? That's a question from Riley Bayton.
No, not in 2022. Not until the bill is voted on that the Senator Loomis is putting forward. So that's going to be probably after the midterms, 2023, 2024, and it'll also include a mandate for other ETFs. They'll just copy the Canadian order, which has worked so well. There was such a concern there'd be massive tracking error. There isn't. It trades in uniform with the underlying Bitcoin and Ethereum, so the same idea can be put onto the NYSE or the NASDAQ. That's coming. But it simply won't happen until some of these mandates and these regulations are put in place and become law.
Okay, we have another question for you, Kevin, from Genie in a Bottle. It's about the crypto winter. There's concern that we're deep in a crypto winter, which, as we know, is defined as a prolonged period of stalling price action after a big price rally. We know that that's happened several times since Bitcoin's inception in 2010. And the last time we had such a winter was in 2018 to early 2020, after the price of Bitcoin crashed about 70% from its December 27 highs. Genie in a bottle, Kevin, would like to know whether you think we're in a crypto winter now, and when do you expect spring to start? What would trigger a crypto spring?
So the reason we're not going to be in a crypto winter again is that the last crypto winter had no possibility of policy or regulation. That is not the case today. There's enough believers that this regulation will be a good thing, watching these bills go through. It's very rare to see a bipartisan bill in today's Congress, but you have one here, which means both sides understand the merits of cryptocurrencies. And so you have a Ted Cruz, sitting right beside a Democrat, which never happens. And so I look at it and say to myself, that's one of the reasons there's a bid, an underlying bid on Bitcoin and other cryptocurrencies, because there's an assumption in the next 2 years something will happen that did not exist in the last winter.
All right, Roy, we have a question for you. It is from Virtual Console, and they'd like to ask you your thoughts on the future of Polygon, Roy. What's your thesis on Polygon? Where do you see that going?
I own a lot of Matic. I think it's a very good coin, very good token. So it's not that I don't have these things. It's a very easy blockchain to use. It's inexpensive. I would say the developer network is not as strong as what we're seeing in some of the other ones like Solana, like AVAX. But I think it's a fine thing to have some of. Again, I don't necessarily see the appreciation potential that I see for the largest for the largest things in the space. And I think in general, I want to make to reiterate a point that we touched on before. Right now, there is an incredibly motivated minority, 16% of Americans who hold cryptocurrency, who will be furious if anything goes wrong in their industry. And there's no one who is, I think, pounding the pavement and rioting because they want to ban cryptocurrencies. And when you have that situation, I think we're going to see very benign legislation and benign regulation. I think you could even feel it in the announcement of Biden's announcement, where he said, basically, we're going to have a committee to develop recommendations. That's what organizations do when they want to slow play and basically don't do nothing. And so I feel like that was an extraordinarily positive development. You could easily have seen fiery language like, this is the world of money launderers and wasteful carbon emissions, and we have to take action against this danger. Right. So,
Roy, we have a question for you from Cassius Cuvey. He's a big fan of Kitco. He says, I'm asking basically about the flow of overall money, if you think it will disproportionately flow back into crypto more than what came out.
More than gold, was it?
More than what money came out of crypto.
Oh, yes. I think we're going to see far more acceptance as institutions, trillions and trillions of dollars of total assets, of which some percent will be placed in the largest cryptocurrencies because of the chance that my thesis might be correct. I just want to reiterate that I'm not suggesting that this is a likely outcome, that we're going to have 10% inflation forever, or we're going to have 15%. But it's certainly a pretty good possibility. And it's a lot more of a possibility when we've actually had inflation of about 15 or 20%. And what I mean by that is if you calculate inflation the way they used to do it in 1990, our inflation rate is already over 15%. So we're already there at my middle case.
Okay, Kevin, a question for you from Patent Expert. He'd like to know, how does HBAR and Hedera play into the crypto market software scenario?
Again, you're trying to guess the use case. And if you believe there's economic value, you may allocate. And so these are not my largest positions by any means, but In the case of HBAR, the easy way to understand it is it's a quasi-decentralized, quasi-centralized chain. And the reason it needs to be that way is when you're a Boeing or a large global manufacturer, you want some element of centralization because you're trying to control supply chains, which has become a big buzzword in the last 2 years because of the pandemic, and indeed has slowed down some manufacturing, including the aerospace industry. So HBAR is being used as a use case for actually making it easier to track and control and make the supply chain more productive. Now, if you believe, and as I do, that that's going to work to some level, well, there's a lot of economic value there. In other words, if it works for Boeing, it'll work for others in that space. They'll standardize on that industry, on that particular chain. That's what happens with these chains. Once a player in an industry says, well, this is great for me, like Solana, they're trying to make the number one chain for NFTs, and that may happen because it's very fast, way faster than what's going on in Ethereum before it goes to proof of stake. And who knows if it really will speed up if that happens, if it happens. And so a lot of this development work going on is being funded by the foundations. And I know in the case of FTX, where I'm a shareholder and I'll disclose again, a paid spokesperson, they have billions of dollars to put to work to develop these chains for their benefit and the benefit of everybody on their platform. And so these are behemoth platforms. You think about it's kind of interesting because FTX is a centralized platform that's investing in decentralized wallets. Why are they doing that? Because it's smart to do that. Acquire the customer once, never lose them. Provide them with decentralization for maybe NFTs or whatever else they want, but keep a centralized wallet for large holdings that have to be audited, and they need the infrastructure for compliance. So I think all of this is to come, but I'll just tag it again by saying it's all just software.
All just software. Kevin, we have a question for you, although you've already touched on it, but we'll let you reiterate that point because the challenge is one of the things you said about carbon credits and mining companies. It's from Zach G, and he'd like to know your thoughts on investing in crypto mining companies that use renewable energy. You've already given us those versus fossil fuel powered miners, saying that Hive blockchain uses 100% renewable energy to power their operations. I know you said that Hive blockchain is going to be in for a mean audit.
Well, I'm not investing in any blockchain mining company that answers the question about carbon credits with yes, we use them. So in other words, the way to avoid disaster, in my view, it's a personal opinion, is ask the company, you claim you're carbon neutral, but are you using carbon credits to get there? And the answer is yes, avoid like the plague, because that's going to have a horrible outcome in just a very short period of time. The only companies that can claim that they're really clean are hydro and nuke. And there's more hydro opportunity right now than nuke. So if the only ones I'm investing in can show me with 100% auditability that they're getting all of their power from hydropower.
All right. Thanks for that, Kevin. Roy, we have a question for you from Onion Farmer, and he'd like to know what is the best way to create yield using your Bitcoin and other altcoins, if there are any platforms that you prefer.
That's a very, very good question. And I haven't mentioned this, but one of the things that makes cryptocurrency so interesting is actually they're a yield play right now. Your baseline yield in places like Celsius is about 3 or 4% on investments if you just give them your Bitcoin to custody like a bank, but they'll pay a lot more than a bank does. There are other ways to get a lot more yield, and many of them involve providing liquidity in liquidity pools and also taking advantage of what I would call the DeFi subsidy, which is related to the millennial lifestyle subsidy that brought us Uber and DoorDash and all these companies that are providing services below cost. Right now, there's a tremendous race to see who's going to be the Amazon of DeFi, who's going to be the one financial services company that provides those billions of people financial services. And VCs are throwing money at projects to see if they can get the one that really succeeds. And in order to do that, to get those projects going and scale, they're subsidizing the investments in these projects with enormous amounts of money. And you can capture that. So there are two different types of trades that are pretty interesting right now. One is to provide money into market makers, essentially people that want to be decentralized exchanges. And another one is incentivized leverage lending platforms, where you basically get paid to invest in the platform and then get paid to borrow against the capital that you've just invested in the platform, rinse and repeat, and you can get some pretty interesting yields. And there you can go way above 5, 10% into the 20, 30, 40%. And depending on how they call it degen you want to be, you can get even higher than that with, of course, commensurate risk.
All right, Kevin, to Roy's point, and as someone that invests in these companies that are trying to provide these DeFi solutions, what do you think could be the Amazon of the space?
I think it's too early to tell, which is why there's so many different bets being put out there. It really is. The outcome of different geographies. I mean, you think about the behemoth FTX has become, they did it all outside the United States. They didn't come here because the regulatory environment didn't provide for what they needed for their clients. And so it's not clear to me who's going to be the winner in the long run. It really will depend when and if the US regulator defines global policy, which I think the SEC will do. It's done it in every other market. You look at the policies in European markets or Asian markets around equities, they mirror very close to what the SEC has mandated. And so I think we're going to get the same thing happening in crypto. It's going to take a little longer. In the meantime, there'll be lots of volatility, lots of opportunity, but it's a little different than stocks and bonds. You need executional skills as a software engineer to pull this off. You can't just say, well, here's my vision for my blockchain. You got to actually deliver it. You got to test it. You got to prove it has scalability, and you've got to prove it has scale in terms of number of transactions per second. All of this stuff is not easy to do, which is why I take a multi-bet approach. You know, maybe it'll be Solana, maybe it won't be. Maybe it'll be Polygon, maybe it won't be. Maybe it's Avalanche, I don't know. Maybe it's Helium, I don't know. I have some of that too. So, you know, it's all about outcomes. You just don't know.
And Kevin, what are your thoughts on platforms like Celsius, for example, that allow you to get yield on your coins?
Yeah, I mean, Roy gave a good use case of how yield works. I prefer to stay a little bit more conservative. I'm using Circle. I have a corporate account there. I'm writing 30, 60, 12-month contracts. Yields are about 4.2% today. And my auditor and my compliance department are willing to allow me to hold up to a 5% weighting in any one mandate, even though I must tell you, it took me 6 months to get them on board, even for a stablecoin. The problem is there are stablecoins being litigated by the SEC right now, not USDC. But while that litigation is unresolved, it puts a taint on the entire stablecoin industry. And so really you should view stablecoins as no different than a Fidelity money market, but they are not the same because the regulator says they're not the same. So what is the underlying if it's not a US dollar? Well, I have to tell you something. Money markets have lots of non-US dollar assets in them, but they've been regulated for decades. So there's a lot more comfort there.
All right, we're going to wrap it up with a final thought from both of you regarding central bank digital currency, speaking of stable coins and such, because, and I'll start with you, Kevin, you've said in the past during our interviews that a Fed coin, a central bank digital coin from the US government is not going to happen, that you think there are very, very low odds of Fed coin happening, and that governments will likely just adopt or modify an existing stable coin. Is that still your position there?
Yeah, it is. You don't see government mutual funds or money market funds because they let the industry innovate. And the same thing's going to happen here. They'll license between 5 and 10 stable coins and let them compete with features. Because again, it's software and how well the platform works. I mean, if you looked at Circle as a software platform 8 months ago and looked at it today, it's completely different. They've advanced so many different features because they've had to. I mean, even I've had feedback to them saying, look, my auditor wants this, my auditor wants that, my compliance department wants this, add this treasury tab, all this stuff. So, I mean, they're doing all that. I would be very encouraged by one index that I don't think enough people have considered. Bitcoin 2022 came out of nowhere and has become the de facto global gathering of Bitcoin, the granddaddy digital asset. This year, It's going to run for 3 days. It's taken over the entire convention center in Miami where I live. That's a big facility. But what's remarkable, the first day, the 6th, it's all institutions and it's totally sold out. That has never happened before. That'll be 1,500 to 2,000 institutions from all around the world there to listen to different thoughts about where we're going with this thing. I'll be doing a keynote exactly on this ESG issue because it's top of the mind for everybody. I'm going to lay out the data I've got and, we'll have that discussion, but it's institutions only. That is remarkable.
All right. Well, Kevin, we will see you in Miami again. Looking forward to it. Roy, I do want to get your thoughts, though, before we wrap on the likelihood of FedCoin, a central bank digital currency coming out of the US.
I think in general, governments love to exert power and control over their citizens. I think we're going to see the Fed try to have full transparency over a stablecoin. Maybe it will be one they develop. Maybe they'll license one. But what we see in China right now with social credit, can you imagine a US government that has the power to look at every single financial transaction you make, prohibit some of them, and extract taxes automatically? They can have negative interest rates very, very easily by just taking your stable coins away. This is an extraordinarily nefarious development, and it doesn't solve anything because, of course, a Fed coin can be printed just like the US dollar, because that's all it is. It's just a US dollar in digital form, and it has the same supply problems that has caused me to be so bullish on Bitcoin and Ethereum.
Yeah, I personally find the idea of FedCoin terrifying for many of the reasons you listed and more.
I certainly don't want to be a Canadian or US trucker with a FedCoin in my wallet.
But that, of course, just bolsters the case for Bitcoin. I think we all agree on that. All right.
Well, I just want to say something about that, Roy. As a Canadian citizen, I'm also Irish, I'm also Emirati. I'd like to apologize on behalf of all Canadians. We will be getting rid of Trudeau very shortly. Don't worry. We're going to vote him out of power. That was an absolutely abysmal performance, and he has been rebuked recently in the General Council in Europe. They're very pissed at him, and so am I.
Well, Kevin, I know we have had the pleasure of discussing your political aspirations in the past. So I'm just going to say, is that something we can look forward to in the future?
No, I'm going to support Jean Charest. I think he'll be Prime Minister of Canada. He's a centralist, he's a moderate, and he supports Bitcoin and policy that has already been developed, and even more. He's going to be, I believe, the crypto prime minister because he knows that's on mandate for so many young Canadians that are going to vote for him on that platform alone. And we will finally get rid of, we need adult supervision in Canada. We need to get rid of Trudeau. He's just a miserable manager, very successful politician in longevity, but the worst manager I have ever seen, ever.
All right. Well, I would like to stress that I'm actually broadcasting out of Canada, out of Montreal today, not New York. So I'll probably keep myself politically safe and not espouse my opinions too much on that one. But Kevin, great to have you with us, sharing your thoughts on politics, crypto economics, and all. Thank you so much. And I look forward to seeing you in Miami. Kevin, Roy Niederhoffer, always a pleasure. Thank you for joining us. And thanks again to our sponsors, Coin Payments. And thank you for watching. Keep it right here.
Roy, good working with you. You're a good
Likewise,
dude.
Kevin. Good to see you.
Good dude. Talk to you later.
All right. Our guests have exchanged